Hello from Real Estate for 21st Century Investors. Today we're going to speak about a subject that a lot of people need information on, do not know where to start. It's called the Housing Choice Voucher Program, also known as Section 8 investing. What the Housing Choice Voucher Program, also known as Section 8, helps low-income families, elderly persons, veterans, and disabled individuals afford housing in the private market. Program participants can choose any eligible housing unit, including single-family homes, townhomes, and apartments with rent partially covered by a subsidiary paid directly to the landlord. There are around 2,000 local public housing authorities, PHAs, across the country that administer the HCV program with funding from HUD. Now, to maximize your investment potential, these are the things you need to consider when you want to invest in the Section 8 housing program. Stable income, number one. Section 8 receives government assistance insured consistent rental programs. So you're getting guaranteed income. Number two, you have lower vacancy rates, high demand for affordable housing, which leads to shorter vacancy periods. Why? Because the government is paying you the majority of your rent. You're not relying on collecting all the money from the tenants who have 1,000 million issues. I don't have the money, didn't work enough hours, this, that. So you're getting most of your money from the government guaranteed. And these type of tenants normally stay for 3-4 years. Long-term tenants, as I said, they stay longer and you have less turnover. So the turnover is what kills you, going in there, cleaning the place, getting it ready for the next tenant. Market resilience. Affordable housing remains in demand even during economic downturns. So even during COVID, when landlords were struggling to get paid, you actually still had Section 8 landlords making lots and lots of money, collecting the rents. Why? Because the government is paying them. Tax benefits. Investors may qualify for various tax incentives and deductions. So it's very important that the tax savings that you get and all the deductions that you can write off for doing your Section 8. Community impact. Investing in Section 8 helps provide safe housing for low-income families. Now, let's talk a little bit about Section 8. How do I start? Number one, you must form a corporation. Why? You need to protect yourself, your assets. So you want to form a corporation, an LLC, incorporate. So if something happens, they fall, they get hurt, they will not sue you. They will then go after the corporation, not your personal income or assets. So that's very, very important. You also have to start a business bank account. Business bank account will collect all your rents from the Section 8 housing program. You'll actually pay all your bills and do all your transactions out of there. Also, you'll want to get from the government, the federal government, you need to get an employer identification number. That's like a social security number. You actually have to have that in order to transact business, sign up with the Section 8. Now, once you get these things in effect, there's several different things that you need to do research. Number one is you need to research the funding. DSCR loans, which are debt servicing loans, are the most popular thing for doing Section 8, simply because they're in the corporation's name. They're not in your personal name. They don't show on your credit, and you can get as many as you need. So it's not like they show on your credit. You have debt to income ratios and things like that. They don't require proof of income. You don't have to show tax returns. So they're based solely on the rental income, and there's a ratio like a 1.25. That's what they look at, that the rent will cover the mortgage. Now, you just don't want the rent to cover the mortgage. You need to factor in management fees, vacancy fees, and you're going to have to factor in some repairs. So when you're doing your ratios, you want to look at all these factors. Why? Because if you're not factoring those in and your rent is not covering your mortgage, your principal, your interest, and all your expenses, you will not make money. So those are super important when you're doing the ratios before you ever make an offer on a property. Now, when you get to the point you want to make an offer on a property, you're going to go through and, like I said, factor in these, do a spreadsheet which will tell you the costs. Once you have all the costs involved, then you will budget that against what the FMRs, the fair market rents, are. The fair market rents are what determine what Section 8 will pay, what the rents are in your area. Now, for example, Cleveland, Ohio, I have several properties there. In Cleveland, Ohio, they have a very large Section 8 housing program. It's called the CMHA. The CMHA, what they actually do is once you sign up and you apply to be a landlord, They will then, you'll have tenants. You'll have to then have them screen the tenants. Once they screen the tenants, they will come out to do the inspection. Now, the inspection, very important also. There's certain things that they look for in the inspection. They're going to look at safety-related things, smoke alarms, smoke detectors, loose things on the ground, tripping. They're going to make sure all the windows open properly in case of a fire. They're also then going to look at near the water sources, GFI plugs. That's very important. So these are things that they will look at. Now, if you fail your inspection, you'll have to wait more time to have another inspection. So they will not move a tenant in until you have passed the inspection. Once you have passed the inspection, they will move forward, and then you'll finalize all of your paperwork. Now, they don't pay you immediately. It could be 30 days, sometimes 60 days before you get the money, but they will pay you the back rents in the arrears. So this is something that does take time to get a Section 8 tenant in. Probably is 30 days. It might be another 30 days before you get paid. So you need to realize you're not getting money instantly. Now, if Section 8 is done properly, okay, very, very important, you have guaranteed income streams. The government is paying you the money. It's not like a person who loses their job or something like that. So very important, Section 8 is government paid. So you're getting your money directly from there. If it's done properly, it can be very profitable. Now, there's lots of pitfalls you have to be aware of. One of the properties that I bought, when I went in there, it failed the lead test. Cleveland, Ohio requires lead testing on any house pre-1978. Once it fails the lead test, you have to go through the remediation. Okay, remediation means make sure there's no lead present. Windows, windowsills, outside, things like that, railings. So that's very important. You want to see if you can buy a home that's already been lead certified, or be aware that there's certain factors that you need to look at, because if it does fail, you'll then have to do the remediation, which costs you thousands and thousands and thousands. I ended up having to change a bunch of windows. Why? It failed the lead test because peeling paint on all the windows. Now, that cost me a lot of money. It holds up being able to market it, get it ready for a Section 8 tenant. I could not move into Section 8 tenant until that was completed. Once that's completed, it has to be a re-lead test. Once the lead test is done again and you pass, you have a lead certificate that you have to provide to the state and the city showing it's lead certified. So that's one of the pitfalls you have to be aware of also. So there's a lot of things you need to do your research and be aware and look at the local laws and things like that in the area that you're going to be looking at. Now, certain areas, Detroit, Cleveland, Ohio, the houses are fairly cheap. A lot of them are older, unfortunately. And then also the rents are good. Ideally, you're looking at homes probably $80,000 and less, single family. Duplex is maybe $140,000. Why? Because on those you can collect somewhere between $200 and $2,400 in rents. That will cover your mortgages, your taxes, your insurance, vacancies, maintenance, management fees, etc. So if you're coming out at the end, realistic numbers after your fees, $350 a door, which means per door, those are actually good, which gives you somewhere in the neighborhood of a 15 to 20% return on your money. So these are things that you need to be aware of before you jump into Section 8. There's a lot of restrictions and government things that you have to be aware of, but it can be very profitable if you do it right. If you have questions or comments or want to know more, please make a comment below, make a question below. Please subscribe, like, and share. And if you have any other issues or you want to know more about Section 8, please contact me. Thank you.